welcome back. In this video, I'm going to be going over Institutional Orderflow Entry Drill and how you can really use it. Institutional Orderflow Entry Drill is basically when price barely comes into a fair value gap and displaces away from it. It's very, very simple. But the anatomy of it is when price comes into a fair value gap but doesn't push past the CE or the consequent encroachment. So if you see here on the chart, this fair value gap here, for example. Let's zoom in on this one bullish fair value gap and draw our consequent encroachment from here to here. Not the quadrants, but just our consequent encroachment. You see how price comes in to the upper half of the fair value gap, which is above the consequent encroachment, and doesn't go past it. It goes into the fair value gap, closes above the fair value gap, and doesn't go below what? It doesn't go below the CE or the consequent encroachment. And then what does it do after that? It pushes higher. Into what? Into this high. This buy side liquidity. So that's basically what institutional order flow entry drill is. It's basically when price goes into a fair value gap, not pushing past the CE or the consequent encroachment, and heads higher or lower based off whatever fair value gap it is. And this happens all the time. Like it does. I'll show you again with this gigantic bearish fair value gap. If we draw fib right here, price comes into the fair value gap but doesn't push through what? It doesn't push past the consequent encroachment. So anywhere from here to here, anywhere from here to about there is where you want to see price stay at. You don't want to see price go past the consequent encroachment. Yeah, it can touch the consequent encroachment, but it just can't go past it. If it goes past the consequent encroachment, that's not an entry drill. It's not. And what you can use entry drills for is basically like last second economic event predictions, or basically a last second entry before price displaces into a certain direction. That's what I personally use it for, and that's what I've been seeing it be good for, is that whenever price wants to like move lower extremely fast or move higher extremely fast, it'll do some sort of institutional order flow entry drill before going anywhere, from what I've been noticing. But obviously I'm sure you can amplify this in even more ways than not just that. But if we see here, there's another bullish right gap. Still, if we draw our consequent encroachment, boom, bam. What do? We stay in the upper half of the fair value gap, which is above the consequent encroachment. We come a little close, but what do? We don't push past the consequent encroachment. So this is a what? A bullish institutional order flow entry drill, right? When you see price resisting from the consequent encroachment, like it doesn't want to go past it, that's a good thing. So if you saw this live, right? If you saw this live and price was coming up and then it started coming down into the fair value gap, right? Let's draw this out. And it started coming down into the fair value gap. When you saw that price started resisting when it came close to the consequent encroachment, it's a good thing. It's a good thing, especially if it's a bullish fair value gap. Because it's like, okay, it's a bullish fair value gap and it's resisting from the consequent encroachment, meaning it wants to go higher off of this fair value gap, right? Very, 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 very simple. It's nothing hard to learn. Very simple. And if you saw this live, you could have took like a 1 minute entry if you wanted to confirm, or you could just take your entry here. I'm not saying you'd have to see if a value gap touched, then have an entry on a lower time frame. No, when you see something like this, it's a good thing. Whenever you see price wanting to go higher very quickly and efficiently, this is what I mean. Whenever I say price is doing something efficiently, I mean it wastes no time doing so, basically. It's not wasting any time, okay? It's very simple. Price efficiency, whenever I've mentioned price efficiency, I just like to call it that because it makes sense, is basically when price is not wasting any time and it wants to go in somewhere, or it wants to go to a certain place very efficiently, basically. It's nothing hard to learn. But let's find some more fair value gaps here that do have an institutional order flow entry drill. If I can even find any, because this doesn't form a lot. Well, sometimes it does form, but I can't really confidently say that because clearly I'm not finding any fair value gaps somewhere is forming. But I'll find one. I might just play some elevator music in the background while I'm waiting. To be honest. Okay, here, right? See this bearish fair value gap here? Boom, bam. What do? We come up into the fair value gap. What do? We don't push past the consequent encroachment. So what is that an indication of? An institutional order flow entry drill, or price wanting to move lower efficiently. Price comes into it, doesn't go past the CE. Once we come into it, we have this next candle. He goes up into the fair value gap, and then it's like, okay, let's go down. And then what does it do? It drops. Simple. And whenever you see price resisting or not trying to go past the CE, that can be your entry. Once you see price trying not to go past the CE or struggling to get past the CE, that's your entry right there. That's where you should take yourself. It's very, very simple because once you see this within real price action or once you see it real time, it's kind of easy to spot because it's really not a hard concept. All you do is just draw a fair value gap, throw your CE on there or your consequent encroachment, and that's how you spot it. It's nothing hard at all, to be honest. It's very, very simple, very easy. But anyways, another fair value gap if I can even find one. I hope I can find one because I'm gonna play. I'm seriously gonna play elevator music if I can't find one in time. Actually. Okay, here. Do you see this? Do you see that? Very precise. Look at this. Now, this is an institutional entry drill. Not saying the ones before wasn't, but this is really. Look at this. You see how price barely even came into the fair value gap? Look at that. That little wick right there. You see that? I'm not sure if you can see that, but price comes into the fair value gap and doesn't push past the what? It doesn't push past the concept of the question. I don't think I have to say that anymore. I think you got it now. I think you can finish the sentence for me. And it doesn't push past the what? Okay, you got it. It doesn't push past the consequent encroachment. Price heads higher into buy side liquidity, completely wiping out liquidity, and coming into this fair value gap, forming another institutional order flow entry drill. Boom. Right there. So boom, bam. Isn't that amazing? That is truly amazing, isn't it? That is wow. That's wow. Institutional order flow entry drill into another institutional order flow entry drill just to reverse and make a CISD and then drop lower. That's an amazing setup. I could imagine taking this live. But this was during London session, though, so I would be asleep for school. But you know, gotta do what I gotta do. Gotta sleep for school, y'all. Don't skip school, chat. Never skip school. Stay in school. What if I just enslave everybody to go to school? Like all my channel members, like go to school and never learn trading again. That'd be so messed up. Anyways, here's another institutional order flow entry drill. Price comes into the fair value gap, doesn't push through to what? You're correct. It does not push through the consequent encroachment. It comes close, but what does it do? It resists off of it and closes above the fair value gap. We come into it, close above it. Good thing. Wicks through the damage, bodies tell the story. Bodies close above it equally, showing that we want to go higher. And what do? I think we go higher. I don't know about you guys, but I think we go higher. I think we go higher. I don't know about y'all, but I think we go higher. Do you guys think so? I think so. I think it's pretty spot on that we went higher. I think so. I think so, y'all. And also, institutional order flow entry drill isn't just with fair value gaps. It can be with any type of imbalance. It can be with a BPR, a Reaper fair value gap, a volume imbalance. And volume imbalances, I'll be getting into that a later video. But volume imbalances are really good for seeing where price really wants to go. Because according to ICT, the volume imbalance is the weakest out of all the imbalances. It's the weakest. So if I just have like a tiny little volume imbalance here and it resists off of this, that's a pretty good influence. But anyways, I'm going to be doing one more example of fair value gap having some sort of institutional order flow entry drill. Because I don't want to make this video too long because it's too simple of a concept to make it like 15 minutes long. But if we zoom in here, guys, looky-o here. Looky-o here. We got this gigantic old fair value gap. Boom, bam. Draw that out. Wait, hold on. If I can't even draw it out. Okay, cool. Right? So we come into the fair value gap right here. We zoom in, right? We come into it. Bam. We come back into it again. Bam. And we both close below it. On both candles that we come into it, we close below it. So that's another extra confluence. Come into it. Bam. Close below it. And we also close below the consequent encroachment too. We close below the fair value gap, and we don't push past the CE. What is that a confluence of? Bearish movement. And what do? We do drop after that. We do. And once again, we do come up to it again. We do come up to it again, but we push past it. So this wouldn't be an institutional order flow entry drill. But we did drop. This was an institutional order flow entry drill, but here we push past the CE and then drop. So yeah, the fair value gap did show some form of resistance, but we still pushed past the CE, so there would be no entry here, unless you took some other fair value gap. So this works on every imbalance, okay? Every type of imbalance. So let's pull out the text real quick so I can show you. So it works with inversions, if I can spell inversions correctly. Inversions, reapers, BPRs. Uh-oh, wrong thing. BPRs. Anything else? Oh, volume imbalances. ICT's favorite imbalance. Irregular fair value gaps. Regular fair value gaps. That's what it works with. Regular fair value gaps. Regular old fair value gaps. Okay? Very, very simple. Very, very, very simple. And even, probably heard me say this before, implied. Go ahead and finish it. Implied what? Implied fair value gaps. So this works on inversions, reapers, BPRs, volume imbalances, fair value gaps, and implied fair value gaps. Very simple concept, right? I think so. Pretty simple. Very, 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 very simple, actually. But I hope this video gave you a pretty good rundown on institutional orderflow entry drill because it's not a hard concept. It's pretty easy. It might be pretty hard to spot and to actually trade. It's because it's the fear that you might get stopped out because it's such a precise concept that you have to trust over time. So hopefully you will get the gist of it in backtest institutional order flow entry drill and getting some entries on it on backtesting. But I hope I gave you a pretty good rundown. I'm not going to be yapping too much. I'm going to be ending this video here so you won't have to hear me yap. And I'll see you guys later. Peace.